Hello, and welcome to the late Sunday edition of Ed Talk. We had some technical difficulties a few minutes ago, and this is Ed Talk. We're on IntellectualRadio.com, and we're on Facebook Live. And I have the pleasure. I always pride myself on having the smartest and the brightest people on the show, and I think I did that again this week. So kudos to me. I have Eric McLaughlin on the phone today. Now, I mean, let me tell you about Eric. He looks just like my roommate from college. You know why? Because this is his twin brother. Hey, Derek. I'm sure you're on the line too. But again, so so I want to talk about Eric first. So Eric has over 12 years experience in the field of accounting. He is a graduate of Morehouse College with a bachelor's degree in business administration with a concentration in accounting. Now, I'm gonna tell you, Eric, that was the hardest. I was a business major too, and those were the hardest classes I ever took. Okay, but anyway, Eric, he obtained employment after graduation. His first job was at Deloitte and Touche as a staff accountant in business advisory services. During his 4 years with Deloitte and Touche, Eric advanced quickly and was promoted to in charge accounting. Now, Eric, you come a long way, baby. You come a long way. In May of 2000, Eric founded Brooken and McLaughlin LLC. Um, Brooken and McLaughlin was an independent accounting firm providing accounting, tax, and consulting services to businesses and individuals. Okay. Now, I want to welcome Eric McLaughlin to Air Talk. Hey, Eric, how's it going today? Hey, how's it down there in ATL down there? In the cool? Well, I'm gonna tell you, it is 30 degrees here today. So you see, I actually have a sweater. I know you have just a little tank top on, but I have a sweater and a polo. It's too cold for you, man. So I got a couple of questions for you today. I wanna talk about that. Tell me actually what your specialty is, Eric. They don't. So I'm gonna jump right in. I'm gonna jump right in, Eric. I'm a I'm a small business owner. You know, how do I structure my small business? Okay.
begin structuring somebody as an LLC, a limited liability company, for example, because they have less formalities than a corporation does. What I mean by formalities is keeping minutes, having to have resolutions, those kinds of things. Limited liability companies don't have that. So it's often easier for someone to maintain a limited liability company. So we will structure them that way. Most clients will structure that way. And in fact, we'll structure them as an LLC tax as an S Corp specifically because the one other strategy we try to work with our clients on, and that is self-employment tax, 15.3%. That's the when you work a 9 to 5, you pay half of that. Social Security, Medicare, you see that come out on your check. Your employer pays the other half. When you work for yourself, you pay both ends of that, which is 15.3%. But if we structure you as an LLC tax and an S corp, we save you having to pay self-employment tax. So that's usually how we structure most clients. The other thing I'll tell you is, remember I said there's several different structures. If you're doing real estate, for example, we would say, okay, if you're going to own a bunch of properties, you may be an LLC, but you won't be an S corp. The reason being that real estate income generally is not subject to self-employment tax. There's no need to go that extra step. So that gets back to my original point being how you're structured really depends on what kind of business you're doing and also what your goals are and how you plan to take money out of the company.
So, Eric, we have our first question here. Let me see if I can get to that for you. Okay. The question is, as a realtor, I want to purchase property, but I was told I need to amend my taxes due to the write-offs. Can you explain the damage that too many write-offs can have?
I don't know if it's damage, but I'm going to tell you, Ed, that's actually a very, very common situation. We have clients that are trying to buy houses, they're trying to get mortgages, you're trying to buy a mortgage, an auto loan, or any other type of thing. You have to show enough income to support that debt. If you don't do that, you're not going to really be able to get that loan because they're going to say you don't have enough income to service that loan. But conversely, when you're trying to do your taxes and you want us to do your taxes, we're trying to write off as much as possible because you don't want to pay more than you have to pay to the government. So what I will say is that you can be less aggressive in writing off and taking deductions on your return to show more income. But the important note to that is to know that whatever return you submit for them getting the mortgage and also of course have to submit to pay your taxes, the important thing to note is you do not want to go back and amend that return after you've gotten the mortgage. If you try to do that, you could potentially put yourself in a position where you're going to be audited by the Internal Revenue Service because they're okay with you amending your return, your liability going up. They are not okay and are more concerned if you have your liability go down significantly.
So that leads right into my next question, Eric. We are on the same page, man.
Yeah.
So what can cause IRS to audit me? So that was one of the things. What are some other things that that can cause me to be audited?
Well, believe it or not, structure. So if you're a sole proprietorship, which when you do the return, it goes on the Schedule C, which is simply the schedule that profit and loss goes on.
Mm-hmm.
Schedule C's are highly audited. Let me tell you why. Because those that are unscrupulous in doing taxes, and there are those taxpayers out there that are unscrupulous in that the way they manipulate the return to get the lowest tax possible and maximize the refund and even manipulate to get the earned income credit is by manipulating what happens on the Schedule C. So we've had clients that have come to us in the prior years. We had one client who works in healthcare. Well, the tax preparer prepared a return for the prior year showing they owned a hair salon and just put numbers on there, income, expenses, whatever. And then what ended up happening was they got audited. They weren't able to support any of the information on the return. So not only did they end up paying more taxes, but because they had earned income credit, they were also disallowed from claiming that earned income credit for 5 years.
Whoa.
That's the penalty. So what we advise our clients to do is a couple of things. One is if you if you set yourself up to be an LLC taxes and S corp, which is like I said, that's the most common structure that we do. But again, what structure depends on what you're doing. But if you're in that situation, like my business is an LLC taxes and S corp, S corps are much less or audited much less than a person who's on Schedule C. Same with being a C corp. The reason being is that the IRS typically requires that if you choose these structures, that you have to have books and records to prepare the return. So they're expecting them also that they're going to be more sophisticated if they're choosing one of these structures or employ somebody, a CPA, a bookkeeper, an accountant, somebody, an enrolled agent, somebody that's going to have some more knowledge to make sure that the return is done right. So I can tell you, I've been in practice for over 20 years, and I don't think I've ever seen, I think one time I've seen an S Corp be audited, and none of my clients that have been S Corps have ever been audited. But I've seen more clients that have come to me that have had Schedule C's that have been audited. So I advise against it.
So next question is, you talk about small businesses and you actually have these startups. What are the best ways to separate the business and the personal finances? Because I'm actually sure you see that a lot too, where we have the commingling of funds.
Yeah,
So
it's a discipline. I'm going to tell you, even as a CPA, even as having my own business, when I started, and I was mixing everything together. Because when you're in business, and the people don't always know this, and when you're in business for yourself, now you as your money comes in, you're just trying to make sure you stuff this thing.
mhm.
You may not have the time or the energy to really say, okay, I got to make sure the business is here and the person here. So I get the struggle. I get the struggle. I identify with the struggle. I've also overcome the struggle for several years now. I have been very deliberate about making sure that my business activity is separate from the personal activity. And the way to really do that is, and there's some suggestions I have. Well, let me say before I say this. Before I say that, let me say this. It's important when you choose these structures, LLC, C Corp, S Corp, partnership. One of the requirements is that you actually do not commingle business and personal. You actually need to keep them separate. The reason being is from a liability perspective, again, I'm not an attorney, but I'll just tell you as a layman, as a CPA, professionally, what happens is if you start mixing everything together, and then you get sued, and I've seen people get sued before. What happens is the attorneys will say, well, and then through a discovery, they're going to say, I need all the accounting records of the business. So you have to give them your bank statements, you have to give them your general ledger, and all those types of things from the business. But when you present those things, when they start to see that you're paying your mortgage, your rent, your car note, going to the mall, going to the club, all that's coming out of your personal bank account, they're gonna say, "Oh, you're not really operating under the guise and the way a corporate entity is supposed to operate, being separate entities," and they're gonna do what they call pierce to corporate veil. So now the very thing that you're trying to guard against by setting up structure and having these different structures to make sure your personal assets are protected from your business assets is no longer available to you. It's going to be all put together and everything's going to be exposed. So the best way to do that is to keep things separate. And the way to do that is have separate bank accounts. I choose to have my personal and business bank accounts at the same bank. So that makes it very easy. So now when I need to pay something personally, I simply initiate a transfer from the business to the personal, and I pay whatever I got to do from the personal. There's nothing wrong with doing a transfer from your business to your personal. It's not seen as you paying something out of your business account personally. That's the easiest way to do it, or set yourself up on payroll. And then you can pay yourself. The money moves from the business to the personal, and then you pay your personal stuff.
So I mean, we are like one. I got the question. Look at you. You are going right into the question I'm going to ask next. I appreciate that. And that next question is, how do I pay myself from the business? So that
That's
go.
actually a good question. I will tell you that with the S corp structuring, one of the requirements is that the owner put themselves on payroll. So, because when you remember, I said that when you're an S corp, you don't pay something on the tax. Then the government knows that. So, what they want to do is they want you to take what they call reasonable compensation from the business to pay yourself. Now, what that reasonable compensation is really depends. It's very vague term. What I typically advise my clients, because putting yourself on payroll can kind of be it can be a shocker to some people because you're used to getting your check if you work a W-2, right?
Mhm.
And you get the money is yours. Well, when you are the employer and the employee, so you're employing yourself, you have to pay payroll taxes. So you have to make sure that the money you're withholding from your paycheck, you give to the IRS, the state, and so forth. So let me get to your question there where you said, how do you pay yourself? Well, typically what you're going to want to do is employ payroll. My firm does payroll, so we are happy to help you if you need payroll services, but so does ADP, Paychecks, Intuit. So QuickBooks has payroll programs inside of their accounting programs. And my suggestion is just let them do it. It's inexpensive to get payroll done. Payroll may cost you $40, $45 of payroll. And for that, they'll do the direct deposit, what I call money movement. So they'll move the money from your business account to your personal account or wherever your employees are. They'll remit the taxes to the Fed, the state, the unemployment department. They'll file the quarterly returns that have to be filed. They'll issue the W-2 and the 1099s. See, all those things that I just named off, those are things you don't have to think about preparing and doing. And how do I do that? How do I make sure? Just let the payroll company do it. It's very easy. And I will tell you, Ed, that it's not only beyond the requirement of just being on payroll, it's something about working for yourself and getting a paycheck from your company with your name on it and your company name on it. It does something to you. So I would encourage you to do that. It will make you work harder, even if you may not get the biggest check because you're going to take some of your money out through what they call a draw, which is where you just write yourself a check from the business. But part of it coming from payroll is just, I don't know, it's something about it. So I always encourage my clients to do this.
So now, Eric, thank you for that. What's the best way to track the income and expenses? So what's your suggestion for that?
Well, okay. So I'm gonna, I suggest QuickBooks. I just
Okay.
do. I've been using QuickBooks for 20 some years. Most accountants use QuickBooks. Some people use Sage. Some people use, Peachtree or whatever other softwares out there. Wave. Intuit's been doing this a long time, and it's a software that's made for people who are not accountants. Believe it or not, QuickBooks is actually set up for people who are not accountants. So I would suggest if you're in business, you need to really use and start with an accounting software. Let me say that number one. QuickBooks has a starting platform called Self-Employed. It will pull your banking information, your credit card information. It will help you categorize it how it should go. And that's really the beginning part. See, when clients come to me and they say, like, I want give me the tax strategy that help me pay the least amount of taxes. I tell them it always starts with, do you have books and records? Because if you can't give me the list of the expenses that you have to write off, we already got a problem. See, you can't when clients come to me and say, well, I think I spent about $1,000 on office supplies. I don't know, maybe another couple of hundred on some subscriptions. That doesn't work. It doesn't work that way because number one is you don't necessarily have the support potentially for if you get audited. Two is you're guessing, so you could be underreporting what your expenses are, and you could be underreporting income, which is another problem. So if you use these accounting software, they will help you. They'll pull the information in. They'll help you categorize it. As your business grows, you may need to employ a CPA or an accountant or bookkeeper to help you out with that. But I would at least start with QuickBooks Self-Employed. I would not be tracking my income expenses on spreadsheets, and I would not be keeping shoe boxes of receipts and saying, here are my receipts.
So Eric, Take me through this. I want to start a business. I'm brand new. I know I want to have. I'm not sure if I want to be LLC, S corp. I don't know what I want to be. Kind of take me through how you take your clients through this process, um, all the way up to telling them to actually use QuickBooks. Take
Well,
me through that process if you don't mind.
typically, the client that comes up, they're brand new. We'll ask them, tell us about the business that you're starting. And then usually once they tell us what kind of business they're starting, then we're able to advise on the structuring, whether it should be LLC, S Corp, C Corp. We'll get the tax ID number. And then from there, we'll talk about, making sure you set up your bank accounts, because you need a place for the money to go. And it should not go into your personal account. It needs to be separate. I mean, if you're trying to develop a business, you need to start separating things and doing things like a business, which is a mind shift. So I get it. But you need to set up a separate bank account, and then you need to start tracking that information through the bank account via QuickBooks. So we'll usually tell them, make sure you choose your accounting software. It's going to be QuickBooks, Self-Employed. Make sure it's connected to your bank. And
Okay.
then from there, we tell them, make sure you spend out of the bank account. So that's the other thing. We don't advise clients to spend using cash. We really advise them to use your debit cards. We advise them to get a business credit card. I know, may have personal credit cards, and you may use those in the beginning, but we really advise them to get a business credit card. Again, to create a separation, and also because the business credit card cannot feed into the accounting software, and that way everything can be tracked in one place. You get set up on payroll, that can be pulled depending on which company you use into the accounting record. So if we get everything set up right on the front end, especially where technology is now, it really can make it a much easier process, and you can really see, what's happening with your business. The other thing that we advise clients on, because this is the other shocker, Ed, as it comes to being a business, is you work a 9 to 5, they're taking out your federal taxes, they're taking out your state taxes, you file your return at the end of the year, you hope you get a refund, celebrate Christmas, all that stuff. When you are working for yourself, you now have to be mindful of the fact that you have to remit taxes on the money, the net income that you're earning. So the other flip here is that when you're working a W-2, they're taking their money out, they, meaning the government, taking their money out first. You get what's left. When you're in business for yourself, you make the money, you spend it on the business expenses, and then you give the government their portion based on the money that's left from the business after the appropriate and allowed deduction. But the way you do that is you do it through what they call estimated tax payments, which occur 4 times a year.
Okay.
April 15th, June 15th, September 15th, and January 15th. You make an estimated tax payment to the Fed and to the state. And it's all just calculated pretty much based on whatever your net income is for that quarter. Again, another reason why you need to have some books and records. And that's really how you make sure that you stay on top of and prevent the fact of having these big tax bills at the end of the year. That's the shocker. You're in business, you've had a good year, you made this money, you do your return, now you owe money. Now you're upset because you owe all this money, but if you make the tax payments throughout the year, then you will be in a better position.
So Eric, this is a this is a good place to have a station identification break. This is Ed Beavers and with Ed Talk, and we're here with Eric McLaughlin, my ex roommate's brother. It's his twin brother. That's why he looks like him. And we're on IntellectualRadio.com. You can call in at and you can call in and ask a CPA. The number is 708-223-8953. The number is again is 708-223-8953. Now, my next question is this question everybody always asks, Eric. That's a question. How do I lower my tax liability?
So it's a good question. One is that it starts with, like I said, number one is you got to have books and records. If you don't have books and records, we're just starting off in a bad place because we're guessing. And that's not going to help us out at all. And also, by having books and records, it trains you in the habit of keeping track of all of your expenses, because that's really the main deduction. Writing off your cell phone, writing off your office rent, writing off the mileage, my standard mileage of traveling to go see clients if you have to go do that, writing off fees you're paying to the CPA or the attorneys, like all those expenses that you're paying, travel expenses, conference expenses, license expenses, like all that stuff is deductible. But if you don't keep track of it or don't remember it because you're not keeping track of it, then you're losing. That's number one. Number two is making sure you pick the right structure. So we talked about that already. Different kind of structures are out there. We need to pick the structure that's going to be right for you. It's not a one structure fits all type situation. I think the next thing that comes about that is understanding the fact that the way the U.S. tax system pretty much works is either you spend it or you get taxed on it. So the goal is always to spend down. And I know that sounds crazy because you got to leave some cash in the business to do what it needs to do, which is true. But at the same time, you need to make sure that you're spending it down. Now, you don't have to spend it like the money's gone. You can put money into retirement accounts. You can, depending on which retirement account you put money into, you can actually max out at putting up to like $200,000 into a retirement account. You choose like a defined benefit plan to do that. But the point is that there's, or I should say, there's several things that you can do to reduce your tax liability. That's part of why you want to engage like a CPA like me. That's primarily what CPAs help clients do is help them figure out what things they need to do to minimize their tax liabilities. Not just one thing. It's going to be a variety of things that come into play. Some things you may be able to do now, some things you may do as your business continues to grow.
So, man, you are like on the money with these questions. So, what questions should I ask as a business person? How to um how to choose the right accountant for my business?
Well, typically, the idea is, so you should be choosing someone who's licensed as a CPA. The reason why you want someone who has a license is because they have something to lose if they don't do it right. You know what I'm saying? You people who are like, I told you about the preparers that would just trying to claim anything on the tax return. There was not all of them, but some of them, or a lot of them, are unenrolled tax preparers, what they call it. So they don't have, they're not, um, they don't have a registration with the Internal Revenue Service. They're not a CPA, so they don't have anything to lose. And if they mess up the return and the government comes after you, they don't really have anything to lose. You want to deal with the license. So that's what I would do. I would ask what areas the CPA works in. What are their specialty areas? Because my practice, for example, we do a lot of work with doctors and attorneys. That's who we deal with, and we do a lot of a lot of work with people who have real estate. But if you're like a restaurant, you may need to go see another CPA. Besides me, someone that deals with and understands restaurants and sales tax issues and liquor license issues and those type of things. So you want to make sure you're dealing with someone who has some experience in the area that your business is in. And also ask how long have they been in business. And obviously, the longer you've been in business, the more, as a CPA, that is, the longer you've been in business, the more you've seen. So the more I've seen, the more I'm able to speak to issues and advise on different things. Ask about fee structures. Because CPAs charge different rates. Definitely more expensive than an accountant, more expensive than a bookkeeper. So you need to understand that and how does that um, work. And then also understand whether or not the CPA is available, all year. Because there's some, not a lot, but there's some that pretty much do taxes, and then you may not be able to catch up with them for the rest of the year. You want someone that's going to be available to you all year as your business grows, as things happen, so you can get the advisement that you need. So that's what I would have.
So I've spoken with a couple of CPAs. As you know, I have my own small business. I spoke with a couple of CPAs, and they have pushed me to a to a bookkeeper. So they would do the main things, but throughout the year they said it would be cheaper for me to have a bookkeeper and then at the end of the year, bring everything to them, and that would actually save me some money. Well, what's your thoughts about
Well,
that?
that's true. And it really depends on my rates are definitely higher than a book,
Right.
but the clientele that I'm dealing with, they kind of want a one-stop shop. They
Okay.
want someone that can compare the books, advise on the financial statements, make sure when the financial statements need to go to the bank that they are acceptable. Because the other thing that can happen, Ed, is like if you're going after government contracts or you're going to the bank for a loan, sometimes they want the financial statements to be prepared
Okay.
by a CPA. So that just helps them out because it's all a one-stop shop for them. So I would concur with what your CPA said. If you don't need that whole all in one package, and also obviously money you want to make sure that you don't have to come out extra money paying a CPA for something that bookkeeper can do. I would agree. I think it's just important to have someone that's tracking your books. I think that's the missing piece that a lot of businesses have is they don't have somebody tracking their books, probably because they're worried about cost. But the answer is what your CPA said: just get a bookkeeper, someone that can help you keep track of the income that you business.
So, um, next question is what if I have more than one business? So I know I have some people on the line who may have more than one business. So they may have one small business on a restaurant, and then they have a rehab business for for um real estate. What are your suggestions on that? How do we keep those things separate? What would you do?
Well, it's pretty much the same advice. You gotta have some. I typically tell clients to have separate business structures because when you have multiple businesses, you're trying to protect revenue streams. Meaning that if all of the businesses are earning their revenue under the one umbrella, if if that company gets sued, everything's exposed. But if you have each business in its own separate you know, LLC, a C corp or S corp, separate tax ID number, one business is not affected by the other necessarily. And that's what you really want. I have multiple businesses myself, a CPA firm, I have a payroll company, I have a company that rents out, subleases the office, some of the office space in my, inside my office suite. So I have multiple businesses, so I get that. But each one has its own LLC, own separate tax ID number, and I keep the money separate. They operate as individual entities. And I think you want to do that because when you're trying to, as the businesses continue to operate, you really should be evaluating saying, does it make sense for me to continue with all of these businesses? Some people think it's sexy to have so many businesses, which is, okay, that can be sexy to have a couple of businesses, but they're not making any money. There's nothing sexy
Right.
about that.
Right.
I mean, okay, it's cool if you get some write-offs, but at the end of the day, we're not in business to get write-offs. We're in business to make money. So if they're not making any money, then I think that's something that should be evaluated as well. I think you also have to figure out how does this play out taxable. I have, like I said, I have multiple businesses, so that means I have to file multiple returns. There's a multiple of expenses that come with that. So I guess the other thing you consider is getting back to does it make sense to have multiple businesses? I got to have, if you have a bookkeeper and that bookkeeper's got to work on all three businesses versus one and that expense is multiplied, does that make sense if all the businesses are not making money? I think you have to think about those things. And the last thing I'll say is I tell people it's difficult to raise three babies at one time or two babies at one time. So
Hmm.
I think you should be cognizant about when you're going out to develop or open up the next business. Make sure your first business is stable enough where you can go and devote the time, energy, and money to a second, third, fourth.
Now I want to stop again because I want you to tell people how to reach you. Do you work in multiple states, or are you just in the state of Georgia? I know federal taxes are all over the country,
Yeah.
so I'm actually assuming you could do federal taxes and others and from other states. But what about the state taxes? And then also, how would they reach you?
So
Yeah.
yes, we service clients all over. California, clients in Florida, uh, Georgia, Louisiana. Our clients are all over. So we're happy to service you or whatever your needs are. My office number is 404-946-1855. 404-946-1855. The website is ericmclaughlinllc.com.
How you like that, Eric? How you like that? Pops up on the screen. Look at that. We own it on Air Talk. We are on it here at Air Talk.
I like that. I like that. We're on Facebook. Instagram. Facebook is Eric McLaughlin LLC. Instagram is EMAX CPA. Same with Twitter. So if you'd like to talk to us, you can simply go to our website, Eric McLaughlin LLC, and click on appointment, and just it'll send us a message, and we'll get in contact with you. Um, and it also tells you more about the firm. But we're here to help.
Now, one of the questions that just came up. Can you use software in place of a bookkeeper?
Yes, and that's the point. Is QuickBooks is set up that way so that you can do that, and then maybe you'll just have a quarterly review with your bookkeeper or your CPA, because there's still going to be adjustments that need to be made that you're not going to be aware of. A common one is going to be depreciation. So if you buy, I don't know, let's just say you had your real estate, you buy a building, office building, or a single family home. Well, that's got to be depreciated on the books. And you may not know how to calculate depreciation, how to record it. So those kinds of adjustments we can make, as well as reclassifying and categorizing things correctly. Another common mistake that people make is they pay their mortgage, or if it was a business building, so if you're paying the mortgage, or if you're paying your auto loan for your company car, just a credit card, they'll just record it on the profit and loss statement. For example, credit card is credit card payment. Well, no, you really need to record what the credit card, what was paid or spent on the credit card, so it goes on the P&L. So it's things like that that we need to adjust to make sure that the numbers are correct. But they can absolutely use software, and I would encourage them to use software, and then have a CPA or bookkeeper just review.
All right. So, Eric,
Yes.
here's the part of the show that my father likes the most.
Okay.
I'm sure he's probably listening. I always mention his name, Willie Beavers.
Okay.
So this is the part of the show that is called Know Your Guests. Okay. Okay. I'm gonna ask you. I'm gonna give you two things to choose from. You can only choose one. I know I get all these smart people on the line every week, and they never follow the rules. Accountants, attorneys, doctors. You smart guys never follow the rules. But this is my show, so you got to follow the rules, Eric. Okay. Uh, okay. So I'm gonna start off first with a doozy right here. I gotta ask you. I know you're from California, right? So I gotta ask you, California or Georgia? Georgia. Okay. Atlanta Falcons or the Chicago Bears? Have they won a game yet? I'm trying to make sure. I'm not trying to be funny. I'm not trying to be funny, but okay. Next question. Next question. Smokey Robinson or Barry White?
That's a
Uh,
interesting one. I'm just gonna say Barry White.
Barry White? Okay. Now here's a hard one right here. Should be coming up. So I'm gonna just say it. Michelle Obama or Oprah?
Michelle Obama.
I'm gonna ask you why. Why Michelle Obama? We've been getting different answers on this question, so I always ask why people choose who they choose.
I just think she's terribly impressive. I like it that she is. I'm big on marriage, so I think the whole thing with how Barack and Michelle, not so good they say Barack and Michelle, but President Obama and Michelle, just their relationship. I mean, I know we don't know a lot about it, but that whole thing just makes me be endeared to Michelle Obama.
Okay, I like that answer. So here's one. Common or notorious P? Is a Derek question? And you will look. You want to phone a friend? Okay. So so Eric, I just want to thank you. I mean, this has been great. I'm actually going to be giving you a call myself. Um, so this this is some great information. Again, we're with Eric McLaughlin. He's an accounting firm of Eric McLaughlin LLC. He's located is it in Atlanta, Georgia, or what part of Georgia? Atlanta, Georgia. I know it's on Peach Street. Now you know Eric. There's like 1,000 Peach Streets in Atlanta. You know what I mean? I'm gonna tell you. I go down. I go to Atlanta, and every sign says Peachtree Street on it. So, but like I said, I just want to thank you for coming to Air Talk. It's been actually been great having you. It was the last minute, so I want to thank you for setting this time away, actually from your family to join me on the show today. All right. So thank you, and I want to say peace to you and thank you, thank you. All right. You can just press the end at the top of the screen. You see it. So thank you for joining Air Talk for where we talk about all things financial. We come on every Sunday at 5 p.m. Central and 6 p.m. Eastern Time. And I will see you next Sunday. Thank you and good night.